Hey everyone, Daniel here and welcome back to another video. I hope all of you are having a great day out there as always. Yesterday cryptocurrencies took an absolute plunge, some falling upwards of 50% in a matter of 24 hours. And whenever any asset class drops that significantly in that short amount of time, it can become very easy to panic sell out of your position for no real reason. And in this video, I want to sit down and look at this whole situation that we just had occur and compare it to history, compare it back to 2017 and kind of look at the chart pattern. And it's actually really interesting to see the trends that we saw back in 2017 compared to exactly what we're seeing now. So if you find any value in this video whatsoever, please consider subscribing and let's get into it. Now, the first thing that I want to take a look at with you guys is a chart of Metcalfe's law. Now, the reason I'm showing you this is because Bitcoin tends to essentially track this kind of value here that we see on this chart. And although it does go above it sometimes it goes below it, it does tend to track it. So we're going to look at this overall, then we're going to look at it a little bit closer, and then we're going to look at exactly what the comparison was between 2017 and now. We'll see that Metcalfe's law explains how the value of networks grows exponentially. Network effects typically account for 70% of digital companies' value. And Metcalfe's law suggests that a network's value is proportional to the square of the number of users in the network. So as the number of wallets grows on the Bitcoin network and on the cryptocurrency network, we expect cryptocurrencies as a whole to increase almost exponentially. And we see this with this chart here. And if we dive in a little bit deeper, we'll see that, Bitcoin as a whole, which is the face of the cryptocurrency market, I was just talking to someone in the comments section, although it is a little bit kind of weird, but cryptocurrency generally tends to follow Bitcoin the same way that the stock market tends to follow the S&P 500. If, the index is up, a majority of stocks are going to be up. If the index is down, a majority of stocks are going to be down. In the case of cryptocurrencies, if Bitcoin is up, generally you're going to see all other cryptocurrencies up. And if Bitcoin is down, a majority of cryptocurrencies are going to be down. And we're going to take a look at exactly what's happening with cryptocurrencies in a moment. But we'll see the sharp pattern here. And Bitcoin generally does tend to trade in cycles, right around 4-year cycles roughly. And it starts at the halving. That's when the mining capacity of Bitcoin gets essentially cut in half, where the difficulty to mine one Bitcoin doubles essentially. And right after we see that, we generally tend to experience a bull market that lasts anywhere from 1 to potentially 1.5 to 2 years in length. Now, after this kind of bull market where cryptocurrencies move up exponentially, we see a bear market where for an extended amount of time, right around a year normally, cryptocurrencies fall dramatically in price. Then we see an accumulation period, an expansion period, a reaccumulation period, and then we restart the cycle with the next bull market. Now, looking here in 2021, we're currently in the bull market phase, and it's expected that we're going to continue on the cycle of the bull market phase throughout the remainder of the year, potentially into the beginning of 2022. Now, what's very interesting is we can take 2017 and 2018, that bull market that we saw, and compare it to exactly what we're seeing now to get a very good understanding of the potential path that cryptocurrencies and Bitcoin alike will take over the coming months and over the coming years. And you'll see the correlation between these two charts is absolutely magnificent. It obviously goes back to May 20th, May 2020 on the white, obviously. And then here the blue is what we saw from 2016 to 2018. And we'll see the correlation between the two. It's absolutely phenomenal. Obviously, sometimes the white line's below the blue line, sometimes the white line's above the blue line. But the trend is very clear. And it's very interesting to see that this move downward that we've seen in cryptocurrencies over the past couple of days and past couple of weeks is something that happened in the 2017 run. And obviously that happened back in 2017. And we saw a major rally after that, going from in and around, I don't know exactly what the values are, but going up significantly in value over the coming summer going into the fall. So when we look at this chart here, it obviously tells us to expect a bit of a bounce back going into the summer and the fall. Picture this chart as more of a suggestion, as it isn't certain what's going to happen with Bitcoin, but thus far it's been following this chart pretty clearly, and if it is going to continue following this chart, we can expect prices anywhere from the 120 to potentially $400 to $500,000 range. Now, one of the things that a lot of people are worried about, especially in this time of correction here, is that we might experience a bear market where we continue to go down. Is that going to happen? In my opinion, no. And for this main reason. If we want to follow what's happened here back in 2017, proportionately with obviously the bear market and the bull market, we need to see Bitcoin go up into the six-figure plus range, potentially closer to $400,000 per coin, in order for us to see that potentially that same magnitude of a bear market that we saw back in 2018. Currently, we're not nearly at those levels, which makes me a little bit hesitant about, just saying, all right, we're going to have a bear market, because we're not at those levels yet. If we do end up getting a situation where we continue to rally throughout the remainder of the year and potentially get to $100,000, $200,000, $300,000 plus per coin, that at that point may be a little bit worrisome and may show, or rather dictate, the potential path of cryptocurrencies throughout 2022. Obviously up to debate whether or not we see a cryptocurrency bear market. It could happen, it could not happen, but we want to prepare for all situations. But in this graph specifically, it does tell us that this dip that we experienced is actually pretty similar to what we saw back in 2016. What happened then? We continue to see a rally throughout the remainder of the year. Now, next thing that I want to show you guys is exactly what's happening with cryptocurrencies across the board when it comes to just generally what the market's doing now after the massive pullback we've seen just yesterday. And cryptos are bouncing back hard. Bitcoin, obviously the face of the crypto market, has been bouncing back significantly since the lows it hit back on Wednesday, almost back to kind of where it was prior to that major dip that we saw. And again, what happens in Bitcoin, it does generally tend to get mirrored in the rest of the cryptocurrencies like Ethereum, which obviously bounced back, Binance Coin, Cardano, XRP, Dogecoin. Some recovered more than others, but just generally speaking, we are seeing a recovery across the board with a lot of these cryptocurrencies. But if you have money on the sidelines and you like some of these cryptos, there are still opportunities, as some of them are still down significantly on a 7-day basis. Ethereum down 25%, Bitcoin down 17%, Polkadot down 25%. A lot of different cryptocurrencies are still down significantly. And again, this isn't financial advice or anything along those lines, but if you have something that you have high conviction in and it's still down, there isn't any reason why you should, kind of look at this dip and beat yourself up over it, as you're still getting a pretty good discount. Now, what's going to happen moving forwards? Honestly, who knows? I personally think that we will see a continued rally throughout the remainder of the year. There isn't really any major catalyst to the downside for cryptocurrencies, at least for the remainder of the year. And especially with inflation coming in higher than expected back in April, we'll see what happens going forwards. I think that might be a very nice tailwind for something like a Bitcoin, which is obviously a store of value and will benefit from any potential inflation on the US dollar. Anyways, guys, thank you so much for watching. I really appreciate you being here. If you found any value in this video whatsoever, please consider giving it a thumbs up, and see you all next time.